Holy that's a nice pump after the Top Goon X signal. Okay. Anyway, it's gonna be a quick video. Let's get into it. Hey everyone, thank you for joining me for this risk management video related to leverage trading brought to you by PrimeXBT. I have partnered up with them to bring you guys a lot of education because I think there's not enough educational resources for you guys, and PrimeXBT agreed. I love their platform. It's really useful for me and it's really helped my strategy evolve. So I hope you guys like it too. If you do sign up using my ref link, you can get a 0.5 or up to a 0.5 Bitcoin deposit bonus as equity to help increase your equity in your account. Anyway, let's get right into it and we'll start talking about risk management. The biggest part of risk management related to leverage trading is not putting your whole stack in your leverage account. And I also like to have multiple accounts spread out through different exchanges, and I use them for different purposes. So I might have a scalp account on one exchange, more of a swing trade account on another exchange, et cetera, et cetera. So do what works for you. It's best for me personally, I found to keep some different amounts of money on different exchanges. And then that would obviously keep me from blowing all of my leverage account too, if something out of the ordinary to happen. If there was 10x leverage longs being either stopped out or due to the slippage and the sheer velocity of that drop just completely being liquidated, and maybe their whole account was at a long, and even if they had their stop loss at break even, they could have taken a huge loss or gotten liquidated. So, or, you never know if your account's going to get hacked. The main point is you shouldn't have all of your funds in a leverage account. It's too risky. It's way less risky to trade spot. I like to trade really large spot positions and enter really large spot positions. And then in the meantime, I like to go to lower time frames and trade leverage. Now, that doesn't work for everyone. Some people like to do 2x longs to increase their capital. That's totally fine. Do what works for you. Trading spot is much less risk. The percentage moves are much less when you're not trading leverage. So you can put stop losses in place at 2 to 3% on a position, where it's a lot harder to do that on a leverage trading position due to the risk of being stopped out. I found it best to build a strategy around leverage trading and focus on that strategy and become consistent and comfortable with it. And that way it becomes a little bit more robotical for you and systematic, rather than just kind of hopping on and, maybe just entering and exiting whenever and not really having a system down. Then you don't have set invalidations. You don't have set targets. You don't really know exactly what you're looking for. So it's easiest to find a system and a strategy that works for you, perfect it, and then just take the setups when they arise. So you may sit here and look at a chart for 30 minutes and not get the setup. You come back an hour later and you see the setup starting to form or whatever, and you wait for it and you wait for it. And then you get your confirmation when you see whatever your trigger is, or whenever all of your criteria is met, you get the bearish divergence on your indicator and you have a break of resistance. So you're going to be able to short that top there, or vice versa, on a long. So my goal is to help you guys understand the best way to do this, and that's how I've found personally over the last couple of years, the best way is by building a strategy. If you start a strategy and it's not working out, you can find a new one. But the key is, don't expect every strategy to work out immediately. There's always going to be kinks. So the biggest thing you should be doing with that is not using full size positions when you're testing a strategy. Make sure it's working over time. And then once you have a consistent profitability that you can prove over weeks or months, then you can start increasing your position sizing, increasing your account size. A lot of people think they're going to build their leverage trading accounts quickly. It's possible, it's very possible, but the quicker you're trying to grow it, the more likelihood there is of you losing more as well. And once you've lost more of your account, it's even harder to build up. The biggest goal for me is small losses. It's very, very, very easy to recover from small losses. It's hard to recover from big losses. Let's say you take a $10,000 account, right? And you lose 20% right away. You lose 20%, you're down now to $8,000. Now, to make that $8,000 back, you need more than a 20% win. If you just make 20% on your next trade of profit, that's great. But now you're only up to 9,600. All right, you have to stay disciplined because you can build up an account slowly over 3 weeks. Let's say you take a $10,000 account and after 3 weeks, it's worth $15,000. All right, that's a 50% increase in 3 weeks. That's great. But if you go and you take that $15,000 that you took 3 weeks to build up, you were disciplined, you followed all your rules, the next day you just totally blow it, or let's say you go 50% on the count and now you're at 7,500. Well, in 1 hour, you may have undone 3 weeks of work. What do you think that's going to do for your mentality? That's going to hurt your mentality, right? So now you're down 7,500 and you're thinking, oh God, I got to make this back. Nobody wants to go to bed or quit trading now that their account's down 50%. And now you're basically screwed, right? You have $2,000 now. You need to do a 500% increase to make back that original value, right? Well, it took you 3 weeks to 50% your account. So now it's going to take you 3 times 10, 30 weeks. It's going to take you 7 months to get back that work you just undid if you stay consistent with your average, obviously. The other thing is too, a lot of people will do really well. Let's say they only use 2 or 3x leverage consistently, and they started with $10,000, and in 3 weeks they got up to $15,000, and they've got a nice strategy in place. It's working well. They're feeling great and comfortable. And then they try to up their leverage. They're like, well, I'm not making enough money. So they try to up their leverage, and now instead of using 3x leverage, they're using 20x leverage, but not the same actual risk management because they're keeping their stops just as wide, et cetera, et cetera. All right. So this is PrimeXBT, you guys. They've got a lot of crypto pairings over here. They've got a few Bitcoin pairings as well, USD pairings. And then you've got different markets as well, forex, some traditional markets, et cetera. You can see all these here. I mostly just trade Bitcoin and Ethereum on here. I found out that the liquidity is great, and those are the 2 charts that I feel most comfortable trading on low time frames. But here I've loaded a small account, right, with 0.05 Bitcoin, and you can see here that this is my balance of my equity. I can do regular trading, one-click trading, double-click trading. I like to do regular, so I have to confirm all my moves. Here's my used margin, my available margin, and my available margin percentage. So my personal goal and strategy is to keep my available margin percentage more than 95%. So I don't know if I'm going to lose or win a trade here, but I'm just going to enter this trade. All right, so you see here, this is Bitcoin. I'm going to market enter. I could limit enter. I'm going to do 0.30 amount, which is actually going to be much less than 0.30, right? And I can place a stop loss before entering if I want. I can use a manual stop loss. I can also place a take profit. So I'm just going to enter this. I can do buy or sell. I'm just going to enter short here. Yes, I want to market. No, I don't have these set. All right, so I'm in. All right, it's filled, order filled. If it was rejected, it would tell me it's rejected. And now you can see here that I went just over my available margin percentage, but that's fine. So I went to 94%. All right. So I've got a lot of available margin left. If this started to go against me, if I didn't have a stop loss, it would go against me, but my margin percentage would drop down to 90%, 85%, et cetera, et cetera. The thing you want to avoid is liquidation. So put a stop loss to avoid liquidation always. If you use manual stop losses, that's totally fine. But if I'm using a manual stop loss, I basically have my hand on confirm. All right. And if price goes against me, I'm clicking this immediately. You should always have a plan in place before entering a trade in general. Let's say my plan was, I want to see this candle go red, and if it goes green, I'm going to close immediately. All right, so 33,310, stop loss 33,310 is going to be 0.0007, which I'm betting is less than 1% of my account. So that's a great risk management right there. If I wanted to widen my stop and go to a 15-minute time frame, that's totally fine. If I want to widen my stop up, I would probably want to decrease my position size because I'm going to have a wider stop loss. So I need to decrease my position size to widen my stop loss. At this point, from a risk management perspective, I could consider, because again, this entry was basically on a 1-minute chart, right? I could consider taking a partial profit as price drops. I could consider putting a stop loss a little bit closer. That's a great plan. Now, if this was a larger position, if I went too big for my risk management standards, right? I went 94%. Let's say I went 3 times the size and now my margin was down to like 84%, which is way too big, which would be away from my parameters. But if I go bigger, I need to have even tighter risk management. And what you should look for on your risk management is good R2R trades. All right. In my next video, I'll cover this more. All right. So if I was in that short right now and my stop loss was going to be here and I hadn't closed, A, I didn't follow my rules, but B, I'm kind of panicking now, right? Is this going to go down? I don't know. Yeah, it looks like it's going to go down. This is where emotions get involved. Never add to a losing position. One thing you can do is with cross margin is, remember, I had a 0.3 base size position. So if I have a 0.3 base size position, maybe I go 0.1 here, and you could do this with limit orders, 0.1 here, and then 0.1 here. So my average entry of all of this is going to be right here in the middle of these two, basically, right? So it's going to be right here's going to be my average entry. If I enter with an average entry of here and my stop loss is up here, now my risk is 0.3% because my average entry is a little bit higher. So 2 points from that: never take a losing trade. Always understand where your stop loss is at, whether you enter into a full position right away with your entries or you ladder them. One thing I will say is that more times than not, when I think I'm going to be right and I'm feeling really good about it and really confident, that's usually when I'm wrong. So going big at times where you think you're going to be right, usually not the best idea. Stick with your strategy. If you have a strategy, it's never, I feel good about this, I feel bad about it. It's what it is. So let's say my strategy is I see a breakout and I draw a line there. And if it's a retest of one of my EMAs, I buy with a 1% stop loss and a 2% reward. Let's just say that. Now, you obviously don't have to take every trade you see, but if you have a trade that meets all your criteria, let's say this is my criteria. I've got to hold my uptrend line. I've got to hold this breakout. There's got to be volume. So I hit all three of my criteria. This is not my real strategy. This actually looks like it might drop, just so you guys know. But if this was my strategy and it met all my criteria, I could just enter and know that 60% of the time my strategy works out. So I don't have to be picky. I don't have to say, oh, I like this one more than this one. I just have to go, okay, here's my setup. Here's my rules. My rules are meeting. The last thing before I go, you guys, is just to understand that if you're on a higher time frame chart, your stop losses are going to have to be wider. So I was on 1 minute charts, and that's okay if I'm using a 0.25% stop loss on a 1 minute chart, right? That goes the opposite way too. My targets are going to be less percentages. So if I'm on a 1 minute chart, I'm going to expect probably 1.5% maximum move. All right. I'm not going to get more than a 1.5% move very often on a 1 minute chart without getting a lot of chop. So understand what time frame you're trading on. If I'm on a 15 minute or a 1 hour chart, I can't use a 0.25% stop loss here. That would be ridiculous. If I want to enter there, 0.25, it gives me look at this. I have absolutely no room error in here. I have to catch the exact bottom of one of these wicks, right? But now I could get bigger moves, like on a 1 hour chart. Maybe I would get a 6 or 7% move or a 5% move, all right? But I can't put my stop loss that tight. I'd have to widen it out. And then again, you guys know what I have to do now is I would have to reduce my position size on higher time frames. Thanks for watching, you guys. I really hope you found this video educational and helpful to you. Stay tuned for the next video coming up in the next week or two. It will be based on strategy planning, building a strategy, and looking more into finding entries and exits. Have a great day.